Ready Capital stock, ticker symbol RC. Is this the best high dividend yield stock to buy right now? Ready Capital is up almost 15% year to date, which is quite a difference with the overall market. The S&P 500 is up 7%. On the 10th of March, RC will present quarterly results. All 6 analysts expect a miss, which is quite interesting. The reason why people love RC is because of the dividends, of course. Dividend yield sits at roughly 12%, which is of course an insane number. But does this mean that RC stock is a buy at current prices, or is it a dividend trap? Well, in this video I'm going to show you real quickly what RC does, the most recent earnings report, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Ready Capital do? Ready Capital is a multi-strategy real estate finance company that originates, acquires, finance and services small to medium-sized balance commercial loans. Ready Capital is the largest non-bank lender of SBC properties. 10.2 billion portfolio of more than 5.5 thousand loans diversified across 50 states and Europe, with 99% senior lien and a resilient current dividend yield of 12.3%. If we check the invested equity allocation, we see that bridge is by far the biggest one here with 52%, followed by construction with 15%. The 12 trailing month core earnings attribution is also looking quite good. Ready Capital focuses on properties with appraised value of less than $10 million and 50,000 square feet. The total small cap commercial market is 3.7 trillion, of which 1.5 is coming from retail, 0.9 is coming from industrial, 0.7 from office and 0.6 from multifamily. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Ready Capital is a 1.48 billion market cap company with a PE ratio of only 6, which is of course very low. Later in this video I will show you my 3 price targets for RC, so make sure to watch until the end, since PE ratio is only telling a small part of the full story here. Revenue is at 472 million, and in this graph we see that revenue is going up really nice and steady, which is something that I really like, of course. During the lockdown periods revenue increased quite a lot. The question is, can they sustain this growth? Over a longer period of time we see that margins are really nice and steady, so this is something that I really like, of course. EPS is also going quite steady in a couple of years. But it's not really increasing, so this is something to keep your eye on. Analysts expect EPS to decrease quite a bit in the coming years, which really hurts to see, of course. Revenue is quite interesting. It's expected to grow in different numbers, but most of the time at low digits, so we have to keep this in mind when creating the price targets. Return on assets is sitting at 0.7%, which is quite low to be honest. Return on equity looks good with 13.7, so this comforts me a lot. Return on invested capital, the most important number here, is at 1.4%, which is kinda low, even for these types of companies. I really like it when the current ROIC is higher than the 5-year average, so this is looking pretty decent since it's increasing. Current ratio is at 1.4, which is around my preferred number. On top of that, it's very important that companies like RC have a good current ratio, so this comforts me a lot. A thing to keep your eye on is the total debt and total cash. I prefer companies who can pay down at least a third of the total debt with the total cash. Right now total cash is at 240 million, while debt is at 9.6 billion. This doesn't look good to be honest, they have a lot of debt. So it's very important that free cash flow is growing, since this is used to pay down debt, do acquisitions, buy back shares and a lot of things. In here we see that free cash flow isn't growing that great, so this also worries me a bit. Definitely something to keep your eye on. And if we check the shares outstanding, we see that it's going up quite a lot in the past couple of years. Usually this is not a good sign, but companies like RC issue new shares to raise capital and grow the business, so I'm not worried that much about this number. Next up are the dividends. Dividend yield is sitting at 12.3%, which is a really high number in my opinion. Annual payout is at $1.6 and payout ratio is at 82%. With the dividend yield being this high, it doesn't surprise me they have this high payout ratio, so that's something you will need to accept with this stock. The 5-year average growth rate of the dividends is 2.3%, which is not that high, but I'm okay with that since dividend yield is already very high of course. RC grew the dividends for 2 years in a row. But does this also mean that RC stock is a buy at current prices? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4% because of what we saw with the analysis estimations and also because I think they can't sustain the current growth. For the mid assumption I'm filling in 5 and for the high assumption I'm filling in 6. For the profit margin I'm filling in 38, 40 and 42. For the free cash flow margin I'm filling in 28, 32 and 38. For the PE ratio and the price to free cash flow I'm putting in 9, 10 and 11 because I don't want to overpay for this stock. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5, but I want a higher margin of safety with this company. Right now RC is at $12.98. I hit analyze and we see a few green numbers. We have a low price target of $9.7 to $13.26, which is around the current stock price. We have a mid assumption of $12.4 to $15.5, which is just a little bit above the current stock price. And we have a high price target of $15.5 to $18. To me, the mid price target is the most justified here, so that would mean they are undervalued. My final conclusion with this stock is that I really like the dividends of course. A dividend yield of 12% is an insane number. On the other side, the stock comes with some risk, so that's definitely something to keep in mind. Fundamentals don't look that great to be honest, and when revenue starts to slow down or other fundamentals lose some of their quality, this stock could fall down big time. For now I'm holding this stock and keep collecting the dividends, but I'm not increasing my position with new shares. I will reinvest the dividends in other companies since I feel more comfortable with owning other positions. Next to that they are slightly undervalued, but not that much in my opinion. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.